So in many ways, this is a sad occasion because this will be our last conversation of the year, and especially for me, it'll be my last conversation at the EUI, although I hope to come back in some form or other in the future, perhaps even if these conversations continue. So I do hope to see you all again in the future. And again, I've been very grateful to Lorenzo and Bridget and Philippe and Yuri for helping to organize, and Julia and so on, for helping to organize such a fantastic series of events all online. But without further ado, the future of unemployment policy. So I should share my screen. So what's the most common argument for a European level unemployment insurance scheme? Well, the argument goes more or less like this. All monetary unions, except for the American one until the New Deal, have some kind of centralized fiscal capacity. So once member states join a monetary union, they give up monetary policy autonomy, they become heavily constrained in the use of fiscal policy, and they can no longer devalue their currency in severe downturns. So as a result, it's often said a monetary union without a centralized fiscal capacity is fragile. It's prone to sudden stops. It's a cause of divergence between member states and a spur to painful internal devaluations and endless austerity. So an EU-level EUI scheme could smooth the impact of such shocks through inter-regional risk sharing. So that's the most common justification. It looks straightforward enough, and it really looks like it relies only on a kind of economic or technical logic. You might think, look, there's no need for sophisticated normative judgments. But there's a central problem with the argument, even if we accept that fundamental, that functionalist argument. And the problem is that there's going to be many UI schemes that will be Pareto improvements from where we are now. So how are we supposed to choose among them? We can't simply provide a technical analysis without considering the distributional consequences of various schemes. Indeed, it's revealing that all of the major proposals for such a scheme, the ones at least that I've addressed or looked at, and the ones that I think are most promising, in fact, do take a stand on what to say about those distributional consequences. And it's even more revealing, I think, that they take exactly the same stand. So all the proposals that are the prominent ones out there at the moment stipulate that for the scheme to work, it has to prevent net transfers among member states over the longer term. Of course, that's a refrain across the board these days. There can't be permanent transfers. We don't want a transfer union. So one way to say it is that any unemployment insurance scheme organized at the European level has to be ex ante distributively neutral. While of course there may be in the short-term transfers, that's the whole point of insurance, over the long term, there should be a balance between benefits and contributions. So here's a common and representative statement of that position from a commission report and proposal. And it's very common. You see similar passages in this whole literature. So some member states may be more likely to use the scheme, which could result in a situation in which some countries contribute much more than they receive from it. For that reason, any variant would have to be equipped with instruments that balance member states' use of the scheme with the contributions they pay. Each of the variants analyzed has experience rating, clawback, or both instruments. Those are instruments to ensure after the fact that there would be some kind of balance between benefits and contributions. The question, therefore, is, do these mechanisms work? So notice that there's no argument that's given for distributive neutrality. It's treated as a kind of technical constraint. Now, obviously, in the background, there's the fear that any more ambitious proposal wouldn't be feasible in the short term. But in these conversations, as we know, we're not so narrowly constrained. So what arguments might there be for or against such neutrality? Now, in the public debate, the most common normative ideal mentioned in this connection is, of course, solidarity. So here, I'm not going to read it, but you can see it's the Five Presidents report, which ends this passage ends with the call for solidarity in times of crisis after introducing the benefits of monetary union. But what exactly does solidarity require of us? For example, are ex post but not ex ante transfers an expression of solidarity? And if not, what more is required and why? So that's the question I want to address. So I now want to give you just a brief overview of the normative framework that's going to guide our selection of a specific proposal. So you begin with the assumption that it's legitimate for member state publics to retain meaningful self-determination over the basic character of their social policy. So for some motivation, ask yourself, what would be wrong with forcibly, though peacefully, annexing and absorbing a member state in a properly federal European state? We would all agree that would be wrong. So to understand why we want to retain meaningful self-determination, choose your own answer to that question. I won't go into it. We can go into it later if you want. So in other work, I've argued that once we accept that, we should see the EU as a way to secure for its constituent welfare states the benefits of integration, for example, from monetary union, while indemnifying them against the materialization of risks that foreseeably come with it, for example, exposure to exogenous shocks. So the EU, on that view, should be conceived of as an insurance union. This understanding of solidarity requires for member states to provides the normative basis for our argument. But now you might think, if that's the best understanding of solidarity in the EU, then does it really support ex ante distributive neutrality? You might think it does. So the argument for why it would goes something like this. So imagine you're designing a car insurance scheme with perfect information about risk profiles. So you know which drivers are high and which drivers are low risk. So surely we shouldn't design a scheme where the low risk safe drivers are forced to subsidize the high risk. We should make sure that premiums are proportional to risk. Let the high risk drivers pay more for their policy. That, you might say, is just what actuarial fairness in insurance requires. But notice that we don't always think this is the fair outcome when we're designing insurance. Take compulsory social insurance at the domestic level. Indeed, take unemployment insurance. It's clear that risk profiles, so here I mean the risk that any individual is going to become unemployed through their working life, is going to differ a lot among individuals and across sectors. You can compare the manual and the non-manual labor, or differences in education and social class. In those circumstances, we treat the differences in risk profile as irrelevant when designing the insurance scheme. We make it compulsory and redistributive from the low risk to the high risk. But why do we do so? Well, for two reasons I want to suggest. First, we recognize that our own ability to get and keep a job is dependent on everyone else's contribution to a basic structure, for example, of law, that makes the development and use of our talents possible in the first place. I mean, what would your programming skills be worth in a state of nature? Second, we recognize that those are factors that are largely, though not exclusively, beyond anyone's immediate control. So now we face the question, should we treat differences in member state risk profiles with respect to external shocks like the case of compulsory social insurance or like car insurance? So here we need to ask, well, what factors are most likely to lead to a lack of resilience and robustness with respect to shocks? And surely here we can include things like a member state's debt level, its quality of governance, its the productivity of its economy, and the efficiency of its labor institutions. All those things obviously have a big impact, such that low levels in each of those dimensions would make a member state high risk to lack resilience and robustness in the case of an exogenous shock, and also to be more likely to be exposed to such a shock in the first place. So now the question becomes, well, are member state publics responsible for those factors? Well, of course they can be influenced by policy. What I want to suggest to you is that those factors are sticky and hard to change in the short to medium term. So you might think, look, but clearly, publics choose in elections, choose governments and so on. And so they're responsible for the institutions and the policies that lead them to have such low levels in each of those factors. But it's rarely the case, if you really think about it, that a choice in an election could make a conclusive difference on any of those dimensions. The dimensions, we might say, are structural aspects often of welfare states, and they endure through time, no matter how much goodwill there is to change them. So for that reason, I think the case looks much more like compulsory insurance, example that we gave before, than like the car insurance one. And even if you think that publics are responsible for each of these dimensions, there's another argument from solidarity that's relevant here. So to see the point, take another example of solidarity from a different context, a context of a protest. George Floyd protest. Imagine you're at that protest and a fellow protester is taunting the police. So they're engaging, as it were, in high-risk behavior. Would you take into account their high-risk behavior in deciding whether to help them when the cops attack? I suggest not. Solidarity requires more of us. Now, it's interesting that that's also true in other fellowships where solidarity matters, like friendship. Among friends, you don't consider, when coming to the side of your friend, whether they're engaged in risky behavior or not. So why do we look in these cases of solidaristic fellowships beyond differences in risk profile? I want to suggest that we do in view of the very large benefits of cooperation in both cases. It would be kind of petty to take those differences into account, given the scope and the aims of our cooperation. And so it is, I think, with the EU and its member states. The benefits of European Union as such, as a whole, overshadow and are much deeper and broader than any minor difference in risk profile. So we should treat those risk profiles, even if they are a matter of choice, even if states are responsible, as in some senses irrelevant when we decide on the correct insurance policy. So what follows from that discussion is that we should design an unemployment insurance scheme by asking what policy a member state would choose if they knew the distribution of risks, but not its place in that distribution, the distribution of risk with respect to lacking robustness and resilience with respect to exogenous shocks. And the idea here is that you would choose a policy that was more generous than if you were a low-risk state choosing a policy for everyone, and less generous than a high-risk state that was choosing for everyone. So in other words, if you didn't know whether you were Germany or Greece, what kind of policy would you select? So the result, if we take this basic framework, is obviously requires a subsidization of the low risk to the high risk group, and so transfers even in the long run, just like in the case of compulsory social insurance at the domestic level. So there's several policies that might be compatible with the framework that I just presented. But here's the one that I think has the most advantages compared to competitors, and that does the best on along the lines that I just suggested. So but I'd let you know that I drew this proposal from a recent IMF discussion note, although a version of it in a much shorter version is also in the CEPR Policy Insight 91, which many of you may have already seen. So in brief, the fund would pay out 0.5% of member state GDP for every 1% increase in total unemployment over the 7-year moving average in total unemployment. So why 7-year moving average? Well, here we're trying to capture just the cyclical movements in unemployment rather than the structural ones. And for every 1% increase, this fund would just pay out as a transfer without a loan 0.5% of that member state's GDP. It would be funded by a yearly national contribution of 0.35% of member state GDP, and it would have an option to borrow at the EU level if the funds are depleted in any one time period. So to give you some sense of how this would work, if the scheme had been in operation between 1990 and 2017, the maximum payout would have been to Greece, which would have received a net transfer of 5.65% of its GDP in 2013. Now, other states, including Germany, would have had payouts. Belgium in the early 2000s and also in the early 90s. So most states would have had some payout, and we'll see exactly what the distribution is in a minute. Notice that on my proposal, and this is different from the Arnold et al. Proposal, the IMF proposal, there would be no loans, there would be no clawbacks, there would be no caps or experience ratings. So there would be no mechanism for trying to prevent transfers over time, as we said, because we think that distributive neutrality is not required by solidarity. In fact, quite the opposite, as I've just argued. And I also think that it would be appropriate to have some minimum requirements in order to benefit from the scheme. It's a kind of conditionality to prevent moral hazard. So we could say, look, states would be probably less, since we have Anton here, would be less likely to, to invest much in activation policies if they could rely on these funds in more severe downturns. So we might say, look, you have to still invest in activation policies in order to benefit from the scheme. And you might also say, look, you have to comply with whatever the new fiscal rules will be, and MTOs, the European semester, also to gain from it. So here, I don't have very much time at all, so I just want to show you, we can talk about this, this graph, these graphs later on if you want. It just gives you a sense of what the contribution, net contributors and the net transfers will be cumulatively over time with different triggers. Sorry, not different triggers, but different payout. So more generous and less generous payouts. And here it's the usual suspects who would be the beneficiaries over time. Look at the blue line, that's the important one. And the usual contributors as well. So we can talk more about that later if you want. And last slide. So some advantages, general advantages also of the scheme, in addition to the ones I mentioned. It has good stabilization properties. So remember, it's 5.65% in 2013 of Greece's GDP. That's pretty good. That's a large enough payout, according to another simulation by Matthias Dahls for, well, not really a similar scheme, but it's broadly speaking a similar scheme. 15 to 25% of income lost through employment would be absorbed by schemes of this kind. So that's significant. It's automatic and simple, and that's much better than borrowing lending schemes like the ESM or the COVID-19 recovery funds, where you have to apply and then there's an ex post negotiation over the terms of the, in most cases, loans or grants. This would be automatic and simple, triggered immediately. It's strongly counter-cyclical because you contribute in good times and then you get a payout only when things go bad. And it allows tons of flexibility since there's no earmarking. You get just a tranche of money that's transferred funds, and then the government can decide how best to use those funds. And it can deal with symmetric shocks because it has a borrowing capacity at the European level. So I'll stop there.
Thank you very much. Thanks a lot for inviting me and having the possibility to at least virtually be part of the EUI again for an afternoon. I'm very happy about this. Based on advice I got from Philip Genschel and Monty Python, I'm gonna make 3 points and no more than 3. And then go from general to specific. And also these points are based on the paper that Andrea sent. So they might be a bit less onto the talk directly, but maybe that's also not so bad because I'm sure all of you have plenty to say on that. So the first is basically what you want to do and develop. And I think this is really nice that you do that also in conversation with Philip van Parijs's work, is a theory of EU justice. But I wonder whether this is not too specific. So while I like the debate that you have in the paper also and on other occasions of Philippe on this, we can't just say, you know, this should be there for the whole world. I'm also not so sure we should just, you know, think about the EU only. And I know that this is very much against the spirit of the conversation where everyone just thinks about the EU. But on another hand, if this should be a theory of justice on some sort of aggregation level, I think this needs to be a bit broader and then maybe use the EU as an most prominent example. So if this is the case, is this a theory on federalism or coming together federations, or is this a theory of justice in international relations and different international organizations that have common reciprocity rules, which, you know, I know maybe none of them is as strong as the EU, but when you think of ECOWAS or some of the other unions, they certainly exist. And given the low capacity of the member states, I'm not so sure that the relations of capacity at the union level and the member state level is so different than in the EU, right? Given that it's all lower. The second point is, who is actually the you know, the entity or the unit of reciprocity or justice or right? Because in my opinion, it's way too much macro and not enough micro. So can member states or regions be even part of this, right? So shouldn't this be individuals, only individuals that are highly mobile, so we cannot pinpoint them to a member state per definition, right? So I personally think that it's not by chance that, you know, any insurance schemes in any member state is based on reciprocity across individuals mostly, and that also the redistribution takes place across individuals over their lifetime. So similar to your model where it doesn't, you know, in the mid run is a redistribution and not between regions, because that's exactly what creates all these conflicts, right? So don't we need a scheme that sets on at the individual level rather than the national level? What I like in the paper, especially don't talk about that so much right now, is you focus also on regions, because there's a lot of literature nowadays out there, to think of Ben Ansel, for instance, that shows how important regions are, not only as political units or units that might, you know, be important for decision making or have effects on inequality, but also as units where people themselves see this as, you know, the area of comparisons when they make their political decisions, right? Not only their own, but maybe much more their town than the nation state, for instance, or the EU. So that as a side note. And then the third point, what about Verursacherprinzip? So what about the whose fault it is, right? Because right now, you think about this as an insurance game or as something where we are behind the wheel of ignorance as member states, and then we are decide on what we should do, and then we are later hit by shocks. But both the characteristics of member states and the shocks are not independent of EU integration, right? So the way that these characterizations matter and the way that the shocks come, they are not independent of the integration itself, right? So by integrating, we change how these works. And so I wonder if the first principle shouldn't be also for legitimacy of such a scheme that, you know, the EU needs to internalize the negative effects that the integration itself brings, right? And these are not per member state, right? Even if I'm a stayer. So somehow you think about this as insurance is for member states, redistribution is for individuals, and redistribution comes mostly because some people are mobile and others aren't. But of course, I can be perfectly immobile as long as my capital is mobile, I still benefit, right? So it's not clear to me that this should be the distinction and that we shouldn't really think about very strict policies aimed at internalizing these negative effects that the integration itself brings, rather than general characteristics that we had before. Yeah. So those were the main points. I really enjoyed reading the paper. I enjoyed hearing you talk and seeing you all, and apologies for having to leave early. Thank you.
Thanks so much. Thanks, Andrea, for the talk and also for the paper. I mean, in the paper, you basically asked the question, does the EU polity need something like a theory of justice? And the implicit answer is yes. And you also quote, 20 references to solidarity, and now we have the European Pillar of Social Rights, these principles. So in a way, there is a sort of understanding of social justice in the EU Compact. But then the question is it an operational theory of justice, or is it just lip service? And of course, we can have a debate about that. And moreover, I mean, as you also underline, any kind of functional legitimation is always directly relies on a normative principle, whether it's full employment or targeting inflation or going for growth and competition. I mean, these have true distributive implications. So you cannot run away from that. So I think I'm very much with you on this point. I mean, the EU in a historical context is, of course, a political union of national welfare states. And that's sort of like a path dependency effect of the division of labor, around the time of 1950s, when there was this understanding for external adjustment. We have the EU opening markets, and we have Keynes at home, and that's the welfare state. And this changed over time with the same principles in a way. It changed over time. I mean, in the period of after the stagflation crisis, when the single market and EMU, the 3%, the 60%, the no bailout clause basically provided for a theory that is very much, I would say, against that kind of welfare state that we had in the 1980s. It's really meant to discipline these wasteful welfare states, to keep them in check. Much later, we get the Euro crisis, and we look back on that now, and we see that this political theory didn't have, as an emperor, didn't have many clothes on, because it's the more generous welfare states that do well on employment, on redistribution, and also on growth. So we're at this momentum. And I think this is where your discussion with Philippe van Parijs is very relevant. We're at this momentum where we ask the question, are we in a bad equilibrium? And therefore, do we need to sort of, make a big leap forward, whether it's an unemployment insurance scheme or some other kind of, distributive compact at the level of the EU and not at the level of the nation state? And I think, if you read, I'm currently reading Piketty, I mean, he really goes in that direction. And I think you take a sort of more intermediate position, and I'm very sympathetic to this. I mean, together with Frank van der Broeke, we often use the frame, the EU should be a holding environment for active welfare states to flourish. So the actual social policy should remain in the nation state, but it should be supported by an arrangement of policies that helps national welfare states to do this well. And I've come ever more convinced that this is the way to go ahead. Also because we here at EUI, the Schuman Center, recently we did a survey with YouGov, and I just list a couple of things what comes out of this survey, and they're really sort of revealing. First of all, EU citizens want to live in democratic welfare states all across Europe. They have very strong national identities, which are related to some of the welfare policies. When we ask the question, what kind of Europe would you want? You know, a protective Europe, a market Europe, or a global Europe? What comes first is a protective Europe, second, a global Europe, and only third, a market Europe. On the whole, European populists are dissatisfied with the EU that is too much far away from their daily lives. So they're quite critical on the EU. But there is very little willingness to leave the EU. I think, you know, this is kind of the good news. And there's a genuine preference that the EU should really concentrate on the externalities, things like climate change, trade, and should not interfere in national taxation and national employment policies, basically the national welfare state. So that's very, very strong. And there is support, this is interesting, for European taxation on carbon and financial transactions. So there is this movement to own resources. So this is very much in line with what Andrea is suggesting, some kind of mid-level, mid-range insurance position. I mean, my question really is in a way this, and I think it comes to when you present your argument as a political philosopher. My question is, so where is the political philosophy here? So you present an insurance scheme. You talk about, you know, all the kinds of uncertainties that are part of the European project, but you basically reduce it to an insurance scheme. And I'm with you on that insurance scheme because it could be part of this, what Frank and I called this holding environment for national welfare states to prosper. But is this enough as a political philosophy? I mean, I think in a way the European Pillar of Social Rights, which talks about access to services, to benefits, to minimum income protection, as a European principle that should be respected at the national level, for me goes much more in a direction of something like, you know, a political philosophy for the EU. Now, finally, I want to say this, which is not part of your presentation, but I think it's very important to discuss at this very moment in time. You know, you can think about, you know, going back to the old theory to keep wasteful welfare states in check, basically by fiscal rules. These rules are very simple to apply. Once you make the recognition, and we all do, I think, and you do, in the wake of the Euro crisis, but now also with the COVID crisis, because it, you know, it hits different countries and different parts of the population very differently. So we agree now that we need much more solidarity, that we cannot rely on a simple reinsurance mechanism. But this brings in the question, how do we agree on discretion? So, you know, I've read the Prime Minister's letter in the Financial Times of the Frugals yesterday, and, you know, it's all very wise, but it really, where it starts to really hurt is that once you let go of the rules, and I think we should, we have to kind of go back to Keynes in a way, but then we have to allow for discretion. And for discretion to work, especially in the context after the Euro crisis that, you know, created a lot of distrust among the member states, we need a lot of trust to say this is the right discretion for Italy to move, and this is where the Czech have, you know, and this is going to be a very tough discussion at the next European Council. And I just wonder, what kind of political philosophy do we need to allow for discretion and to improve intergovernmental trust in the EU? Thanks.
I spoke too long, so I'll try to limit myself. Both of these were excellent comments, and there's so much to explore there. I'm sure many of these issues where I don't take them up now will be taken up also in questions. Okay, so let me just start with Laura, since also you have to leave very soon. Right, so the first question Laura asks is, you know, why have you focused on the European Union? I mean, shouldn't we really, if we're aiming to have a kind of philosophy of justice for something like the European Union, shouldn't we have it at a much more global level? Is this meant to be a theory of justice that applies to federations or to international relations? Can it apply also at the subnational level? How do we think about what level to approach the theory? Is that more or less, that's your question? Yeah. So, I mean, of course, I haven't presented to you all the background to the theory that I present, but on a view like mine, the trigger for duties of justice, of demanding duties of distributive justice, where it's not humanitarian duties, is the production together of collective goods. Okay, so it's not mere humanity. Mere humanity isn't sufficient to trigger these demanding duties of egalitarianism. You need some kind of cooperation first. So once you have a theory, because it's a theory that's where egalitarianism is a demand of reciprocity, properly understood. But once you have a theory like that, you have to start with the collective goods. So what kind of collective goods are we producing? So as you see, you know, when you start to think about reciprocity and what reciprocity requires in different relationships, that's exactly how we think. Reciprocity requires something different when we're talking among colleagues or among friends or within a city or within a country or, you know, among nation states. And my suggestion is we have to first provide some interpretive account of what it is that we're doing together, what the benefits are that are being provided together before we can tell you what justice requires of us, given that level of cooperation. And so there's a story about what the collective goods, the public goods provided by European integration are. And it's only then, only once we have them, that we get a theory of egalitarian justice kicking in. So that helps to then address your question. So you say, well, is there a theory of justice that should tell us why we ought to have European integration in the first place? And I would say, no, a theory of distributive justice can be neutral. It just says, if you do decide, say, to join a monetary union, you don't have to join a monetary union as a matter of justice. You could stay out. But if you do join one, you have to then, as you put it, internalize the negative externalities. And an account of reciprocity or solidarity, as I call it, will tell you what's fair and what's not once we're cooperating. So that's the sense in which I hold some things constant, like monetary unions. Like, well, if you want to have a monetary union, here's what's required. But you don't have to have a monetary. If you want to have, free movement, that's fine. You might not have to have free movement, but once you do, here what justice requires is a matter of reciprocity, right? So that's the way my view works. I hope that helps a little bit. Now, on the question, why can't we have, shouldn't we have an unemployment insurance scheme that's not a reinsurance scheme? I see Frank is here, this is great. It's not a reinsurance scheme of national schemes, but that simply replaces, say, or supplements domestic schemes with a federal one. Why not have something like that? You know, maybe something more like the US, but although the US model is a bit more of a hybrid. Why not have something like that? Well, the main reason is that, remember, one of the constraints I had, the constraint I had that I start off with is that we think it's legitimate for member states to maintain their, as it were, decision-making capacity over self-determination over social policy. The problem is if you shift wholesale and replace domestic schemes with a supranational scheme, you're going to gut a central part of the nation state. And the problem is that social policy doesn't come in parts, as everyone here knows, right? It's like, you know, unemployment insurance goes with your minimum income, goes with your labor institutions, your collective wage bargaining. All these things work together. And they're very, you can't just, so if you just suddenly replace one and put it at the European level, you're in effect disabling nation states from, you know, you're undermining their self-determination in quite a fundamental way. Also, you would require much more harmonization of social policy to replace it. Whereas my model, which is this reinsurance, which kicks in, takes very little extra integration at all. I mean, you might have to have some own resources in order to fund your, you know, to provide kind of collateral or whatever guarantees for the loans, you know, at the EU level. But there's a million ways you can do that. We saw it with the Corona recovery funds and so on. Okay. The last point you make is, well, I think I sort of addressed it already. It was, well, which parts do we think of as constraints and which parts do we think of as what we can change or what philosophy should allow us to change? That was in a way the question, like what? You treat integration itself as a given, you say to me. And I said, well, yes, but that follows from the reciprocity-based view. It's a separate question whether we should have integration in the first place. Okay, Anton, Anton and I think we agree a lot on this. And it's not surprising, I also agree a lot with Frank on these questions with whom we go back and forth a lot on this. What to say? So with respect to the Piketty proposals, I just want to throw it out there. I mean, so it sounds like it's a huge leap forward in some ways, right? He wants to have direct taxation at the European level, right, of incomes, of personal incomes. But interestingly, the proposal, if you look at the details, is meant to be distributively neutral. So states are supposed to get back over the longer term exactly what they put in. Now that's interesting. And again, these kind of things need debate. Everyone just takes it for granted that there can't be a transfer union, but it's never clear why. Right, so where's the philosophy in this? Well, you know, again, can we just say it's an insurance union and then finish there? But there's crucial questions, as already in my presentation, you could see. One question is a question of collective responsibility. How do we decide? What kind of model of collective responsibility can we use when we're deciding on an insurance scheme? That's fundamental, whether we should design it like car insurance or like compulsory social insurance at the domestic level. That's a philosophical or normative or moral issue. It's not just a technical one. So we need to understand, you know, we need to have an argument for why we should do it one way rather than another. Also, we need the philosophy because there will be people, and they're very good arguments for why this kind of reciprocity-based starting point is the wrong one. We say, well, no, justice is a demand of equality among human beings as such. The EU is just an instrument, one among many, for realizing global justice. So we need to have an argument also against people like that. And we also need to have some sense of what kind, I already said about the insurance. So then you ask, well, what about discretion? How much discretion should be allowed to nation states over fiscal policy? I think that's what you mean. Like, oh, these constraints, the fiscal. Now there, on a model like mine, we're going to be much less concerned with moral hazard, right? And indeed, there's a very interesting discussion by Deborah Stone. You know, moral hazard, the idea of moral is actually important in the idea of moral hazard. So if you, one common definition is moral hazard is when people accept more risks than they otherwise would have because they can, because they're insured, okay? Now you think, why is that moral hazard? In some cases, we want to increase people's risk, you know, their risk, their exposure to risk. And so insurance would be a way of getting them to engage in more risky behavior, which is something we want independently. So, you know, Deborah Stone talks about unemployment insurance this way. If there, you know that if you go if you become unemployed, you have insurance, you have a fallback, then that will lead you in your job choices, in your job training, to take greater risks. And maybe that's a good thing. Maybe that's exactly what we want. So, you know, is it moral hazard? I mean, you know, that makes it sound like something horrible that we want to avoid. It's something that we don't necessarily want to avoid in every case. So the same thing we can say when we're designing an insurance policy, which will always have moral hazard, you know, with respect to nation states and so on. Maybe we want nation states to have more fiscal space. And that's the whole point of the insurance in the first place. And that would be a requirement of solidarity. And then there's a longer discussion about the relationship between trust and solidarity, which I won't go into unless you're interested. But that again, we need philosophy to kind of understand what counts as illegitimate moral hazard, gaming the system, and what counts as, no, actually making use of the system in a morally legitimate and indeed productive way.